Oh yeah. What's up, boys? Mm-hmm. Yeah. Hello and welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. Today we're going to be talking about cryptocurrency because that's what we do on the show, but primarily the biggest news, of course, for the past week has been the statement on certain proof-of-work mining activities from the SEC. Of course, that is the U.S. Securities and Exchange Commission. That's going to affect us presumably. I mean, obviously right now, what's going to really affect us overall? I mean, price, right? Like, let's not beat around the bush. We can get regulatory clarity, sure, but unless price starts appreciating, mining right now is just, it's rough out there, boys. Now, quantum blockchains are mining Bitcoin with AI. This is a really interesting topic as well. It brings up the question of the validity of, cryptocurrency. We had talked about the possibility of basically not spamming when we covered the article from WhoSat, and now there is kind of another similar threat along the similar vein. It'll be interesting to see and talk about if that's even a possibility and what it actually means for Bitcoin and cryptocurrency mining as a whole. There are some launches from, I think we have the 5060 Ti coming out on April 16th. So we'll take a look at that and see if we can come up with some guesstimates on hash rate for that one. Michael Saylor also says that there is a 200, or basically we're going to cover his $200 trillion Bitcoin strategy. We're also going to be talking about proof of work. Cryptocurrency mining doesn't trigger securities laws. That's just going to be a summary of the other one we were talking about earlier, the SEC clarification. JHash has launched we're going to be talking about cloud mining, okay? I don't want to talk about cloud mining. It angers me. But give me 1 second, boys. Let's see, is this? Yeah, hold on. Of course, I'm on call today, so. Oh, wait, it got pulled up. Okay, never mind. All right. Never mind, that was help desk. That wasn't on call. So we're good to go right now. Anyways, they're going to be launching, well, we're going to be talking about cloud mining. I'm not a big fan of cloud mining. My editor thinks that we should talk about it. So I guess we'll talk about it. But, yeah. We're also going to be talking about some other mining news, including mining suppliers, as well as hash price, as well as public mining stocks going down in value. And then we have some minor releases. We have a bunch of videos to react to as well. So lots of fun stuff this week. Before we get into it, welcome everybody in the chat. We got Tech Gamer. Thanks for stopping in. Tech Gamer did ask, he said, I want to solo mine Raven coin on a 7800 XT. Is it worth it or not at the 38 mega hash a second? I feel like you could get better out of that. Let me look this up real quick for you. So if we go to hashrate.no, I know like the best miner, I think out of the box still for Raven coin, the best GPU for that is going to be the 6800 XT. And let's look, Raven. Yeah, it's still that. The 7800 XT by and large is the same exact as the 6800 XT, just a little less efficient. So from that perspective, I think like if we look it up real quick, I mean, you can always go to hashrate.no and do this yourself. But if we go to, let's go to coins, let's pull up Raven coin, right? And then we pull up the benchmarks and we take a look. Like obviously 6800 XT is at the top. It looks like, did they even test the 7800 XT? They haven't. Okay. Or wait, have they? Let me do a control F, 7800 XT. There it is. Okay. So it says it's way worse. I feel like I do have one of these. Let me throw it on and see what we get. It should be, in theory, only a little bit less efficient than the 7800 XT, but maybe I'm incorrect as far as that goes. So, you know, though, if you're solo mining, you're just gambling. So if you want to gamble, gamble. If you don't, don't. I mean, that's pretty much the answer to that one as far as that's concerned. Is it the best miner right now for Raven coin? No, it's not the best GPU for Raven coin right now. That's still the 6800 and 6600 XTs. So, I mean, there you go. Kielbasa is in the chat. He said, did not think there would be a stream tonight. Well, there is. So, congratulations. Thanks for being here. I do know that we have Mining Disrupt going on, so lots of information coming out from Mining Disrupt right now. Maybe we'll pick some up at the end of the show and see what's going on. But I mean, I haven't seen anything other than, you know, ASIC boxes getting announced, which at this point is just a big, you know, I don't know. Maybe I'm getting too negative in my old age, but it just feels like a manufacturer influencer circle jerk trying to sell you guys a bunch of stuff over there. I'm sure there'll be a couple good ones that will be interesting and maybe worth purchasing, but by and large, I think it's going to be a little rough at the end of the day until the market starts recovering, right? We got, should I buy the BitAxe Gamma 601 miner? I mean, these are lotto miners. I feel like we get asked this all the time, so it's a little frustrating, but You know, is it a little bit better than buying a lotto ticket? Maybe, right? But at the end of the day, it's still like buying a lotto ticket. You're gambling. So is it okay to gamble? No. I mean, it's not rocket science here. It just isn't. Is it okay to gamble? No. So is it a good idea to buy a lottery miner? No. Game over. Pretty easy. Not that difficult. I just don't think so. But Heavy Flavor, welcome to the stream. Squirrel Master, welcome to the stream. Design a Modern Life, welcome to the stream. Tactics, welcome to the stream. Thanks everybody for stopping in. Let's get into the first thing today, which is the statement on certain proof of work crypto mining activities. As part of an effort to provide greater clarity on application of the federal securities laws to crypto assets, the Division of Corporation Finance is providing its views on certain activities on proof of work networks known as mining. Specifically, this statement addresses the mining of crypto assets that are intrinsically linked to the programmatic functioning of a public permissionless network and are used to participate in and or earn for participating in such network's consensus mechanism, or otherwise used to maintain and or earned for maintaining the technological operation and security of such network. We refer in this statement to these crypto assets as covered crypto assets and their mining on proof of work networks as protocol mining. Protocol mining or networks is this. It says networks rely upon cryptography and economic mechanism designed to eliminate the need for designated trusted intermediaries to verify network transactions and provide settlement assurances to users. The operation of each network is governed by an underlying software protocol consisting of computer code that programmatically enforces certain network rules, technical requirements, and reward distributions. Each protocol incorporates a consensus mechanism or method for enabling the distributed network of unrelated computers known as nodes that maintain the peer-to-peer network to agree on the state or authoritative record of network address ownership balances, transactions, smart contract code, and other data of the network. Public permissionless networks allow anyone to participate in the network's operation, including the validation of new transactions on the network in accordance with the network's consensus mechanism. Proof of work is a consensus mechanism that incentivizes network transaction validation by rewarding network participants called miners who operate nodes, adding computational resources to the network. Proof of work, or POW as it says here, involves validating transactions on a network and adding them in blocks to the distributed ledger. The work in proof of work is the computational resources that miners contribute to validate transactions and add new blocks to the network. Miners do not have to own the network's covered crypto asset to validate transactions. Miners use computers to solve complex mathematical equations in the form of cryptographic puzzles. Miners compete with their peers to solve these puzzles, and the first miner to solve a puzzle is tasked with accepting batches of transactions from other nodes and validating or proposing new blocks of transactions to the network. In exchange for providing validation services, miners earn rewards in the form of newly minted or created covered crypto assets that are delivered under the terms of the protocol. And so basically they're just distinguishing between the block reward and then, of course, fees that are generated at the same time. So that is basically all the fees are going to be covered under this term, which is covered crypto assets. A miner providing validation services receives the reward only after the other nodes in the network verify through the protocol that the solution is correct and valid. To this end, once a miner finds the correct solution, it broadcasts this information to other miners who can verify whether the miner properly solved the puzzle to receive the reward. Once verified, all miners then add the new block to their own copies of the network. Well, yeah, I mean, not the miners themselves. The nodes do, right? The nodes hold the ledger. I suppose like it depends on, there's a distinction there that I don't know if it's important or not. What do you guys think? Do you think the distinction of where the ledger is held and where it writes to is important? Wouldn't it be important who holds the ledger in some circumstances? I mean, obviously, I think this is going to clear that up anyways from what I know happened or what they decided down here, but just something to think about. Proof of work is designed to secure the network by requiring miners to spend considerable time and computational resources to authenticate transactions. When the validation process functions in this way, it not only makes it less likely that someone would seek to undermine a network, but it also makes it less likely that miners would include altered transactions, such as those enabling the double spending of covered crypto assets. In addition to self or solo mining, miners can join mining pools, which allow miners to combine their computational resources to increase their chances of successfully validating transactions and mining new blocks on the network. Mining pools have developed into various types, each with different payout methods or different methods of operation and reward distribution. A pool operator typically is responsible for coordinating the miner's computational resources, maintaining the pool's mining hardware and software, overseeing the pool's security measures to protect against theft and cyber attacks, and ensuring that miners are paid their rewards. In return, the pool operator charges a fee that is deducted from the miner's share of the rewards earned by the mining pool. Reward payouts vary among pools, although rewards often are distributed across the mining pool in proportion to the amount of computational resources that each miner contributes to the pool. Miners have no obligation to stay in a pool and can choose to leave a pool at any time. Of course, depending on the payout method, the distribution method, we've covered this so many times on this channel, but definitely look up, of course, payout methods from different mining pools. It will determine, essentially, how much of a loss you will be at if you do decide to swap pools, because some payout methods will put you at a larger loss for leaving that pool than others. And this was obviously at least early days, this was a big problem where people were trying to figure out how to stop pool hopping because some of the early payout methods would allow you to essentially get full credit or almost full credit for solving the next block. So a miner would put in a bunch of work, computational work, and then jump to another pool and then be able to get, essentially more rewards at the end of the day. By and large, I think like those payout methods have gone the way of the dinosaur. Everything now, PPLNS solved that mostly. So, it's just something, a little bit of crypto history, I suppose, for you guys. So it is the division's view that mining activities defined in this statement in connection with protocol mining under the circumstances described in this statement do not involve the offer and sale of securities within the meaning of Section 2A1 of the Securities Acts of 1933, the Securities Act, and Section 3A10 of the Securities Exchange Act of 1934, the Exchange Act. Accordingly, it is the division's view that participants in mining activities do not need to register transactions with the Commission under the Securities Act or fall within one of the Security Act's exemptions from registration in connection with these mining activities, which is the huge news that we are really looking forward to at the end of the day was what the regulatory framework surrounding mining was going to be and what the burden of basically record was going to be on miners. Because obviously, if we were going to see proof of work cryptocurrencies be defined as securities, it would then, in some circumstances, people were worried that you were going to have to essentially, as a miner, submit all of these transactions that were processed by your miner, which obviously gets extremely difficult when you start talking about pooling and stuff. I assume that would have fallen under the mining pool's responsibility, but that is no longer a concern here. So obviously huge news for crypto mining, positive news as a whole. Some of the stuff that's been floating around, like no tax on cryptocurrency mining, these types of things, not accurate. I think this may impact positively potentially the capital gains issue. So for those of you not in the know, currently crypto mining gets taxed at two intervals. First, it gets taxed as income on the day and time it was mined, and then two, it gets taxed as capital gains once the miner decides to sell it if it was at a profit, capital losses if it was at a loss. And I'm hoping that we see that get changed. I don't know if that will for sure change, though. It's just something that I think for record keeping, etc., can obviously be a hindrance. It's important as a miner to keep those things in mind too, as you're trying to remain profitable, right? But it does go on to say that the division's view pertains to the following protocol mining activities and transactions. 1, mining covered crypto assets on a proof of work network, and 2, the roles of mining pools and pool operators involved in the protocol mining process, including their roles in connection with the earning and distribution of rewards. Only mining activities undertaken in connection with the following types of protocol mining are addressed, which is solo mining and a mining pool. Now, a solo miner will build their own node and validate transactions through that. So just keep that in mind in general, that if you are solo mining, you have all your own infrastructure. If you're mining through a pool, then you are combining your resources through other people's infrastructure, right? Or using a part of it. Now, Section 2A1 of the Securities Act and Section 3A10 of the Exchange Act each defines the term security by providing a list of various financial instruments, including stock, note, and bond. Because a covered crypto asset does not constitute any of the financial instruments that are specifically enumerated in the definition of security. We conduct our analysis of certain transactions involving covered crypto assets in the context of protocol mining under the investment contract test set forth in the SEC versus Howey, which is the Howey test. And that is used to analyze the arrangements or instruments not listed in those statutory sections based on their economic realities. In evaluating the economic realities of a transaction, the test is whether there is an investment of money in an enterprise premised on a reasonable expectation of profits to be derived from the entrepreneurial or managerial efforts of others. Federal courts since Howey have explained that Howey's efforts of others requirement is satisfied when, quote, the efforts made by those other than the investor are the undeniably significant ones. Those essential managerial efforts which affect the failure or success of the enterprise. Now, this one's important because obviously a lot of people have been a little offended by my statement that essentially fees or developer fees for a cryptocurrency are not a good thing. My premise, of course, I said it a little bit more combative in the manner of, I said, if a cryptocurrency developer decides to put a fee that comes out of the mining rewards that essentially they don't believe enough in their project for it to be successful. Now, that might not be 100% true, and obviously can be a little bit aggravating to some people. I understand that, but what it did do was get the conversation going. And one of the big things, of course, with adding in a fee to the blockchain that goes to the developers out of the mining rewards is that it does bring into question whether or not that project fails or passes the Howey test. Now, in this particular statement from the SEC, I'm not so sure that any of the cryptocurrencies that derive fees out of the mining reward are in the clear, because if the piece of the mining reward is going to the developer, which is then being utilized to pay for things like essentially exchanges, then, and that is going to be executed by the development team, then there is an argument for the effort of others from that investment to essentially drive the price up, because once it's listed, it will increase demand. Okay. So this is why, or this is the number one thing to take into consideration with projects that have fees that come out of the mining reward. Now, we don't have regulatory clarity on this particular situation, but that is something that I wanted to point out because it, obviously we recently had those discussions. Now, when we're talking, somebody wanted to ask about Wart. We could go down, or Warthog, we could go down that path. Let me finish this. I'll talk about Warthog in particular if you want me to, because obviously I did get updated on that particular situation. I do have some thoughts and we can go into it, but I just wanted to bring that up because it was a good opportunity to talk about that, as it is in relation to this in particular. Now, it does define self-mining or solo mining, and it says it is not undertaken with a reasonable expectation of profits to be derived from the entrepreneurial or managerial efforts of others. Rather, a miner contributes its own computational resources, which secure the network and enable the miner to earn rewards issued by the network in accordance with its software protocol. Okay. Now, for a mining pool, it says, likewise, when a miner combines his computational resources with other miners to increase their chances of successfully mining new blocks on the network, the miner has no expectation of profit derived from the entrepreneurial or managerial efforts of others. By adding its own computational resources to a mining pool, the miner merely is engaging in administrative or administrative activity to secure the network, validate transactions, and add new blocks and receive rewards. In addition, any expectation of profits that the miners have is not derived from the efforts of a third party, such as a pool operator. This is obviously going to be great news for pool operators, whether that's 2Miners, Viper, Hero Miners, etc. This will be probably a little bit of clarity that offers some relief. So, two good things that came out of this. Obviously, pool operators off the hook, as well as miners in general off the hook. Now, since people are asking about Warthog, I jumped into that kind of blinded. I got hit by a community member over there, which I don't appreciate. And if you want to keep doing that shit, that's fine, but I'll fire back, right? Here's the deal. Warthog, to my knowledge right now, it's not what I'm referring to when I say fees. So a developer fee, when I think about a developer fee for cryptocurrency mining, is a fee that's coming out of the mining rewards without the decision of the miner to participate, right? It's forced participation of the fee. That's the type of fees I'm referring to when I bring this subject up, and my discontent with it in general. My understanding with Warthog, when I looked at what was happening, was there was a vote to allow miners to opt into a donation. Now, a donation clearly clicks that out of the worry of essentially being a security, right? So as soon as it's a donation, that's a completely different thing. And it allows for miner choice, right? It allows for participant choice as to whether or not they want to donate to the development team. And so I think that as far as Warthog goes, and I'll have to get updated on what they decide to do fully later on, but as it sits right now, I don't see any problem with having an option for you to decide to offer to basically donate or not donate. The other big argument that was coming up when discussing fees was, well, why is everybody okay with the mining software having a fee and not the blockchain? And that's a really simple answer. I mean, you basically have to be retarded not to understand the difference between a tool and a currency, right? Like if you're going to have a currency that is going to take a fee, that's a huge difference from a tool, right? Or even a commodity, right? So take gold mining, for example, right? You have to buy the tool to mine the gold, but you don't give a portion of the gold, which is that commodity, to some organization, right? I mean, obviously there have been attempts at doing that, but I wouldn't say that would be something you should do, right? So that is essentially the huge difference, is you're paying to utilize a tool, and what you're developing as a blockchain, whether it's a currency or a commodity, right, is a completely different thing. Now, usually there is an emotional manipulation by developers, by community members, to try to emotionally manipulate you into feeling bad for the developers because they're working so hard on the project. In which I would just point to Satoshi Nakamoto and say, if you want to claim that you're like the brilliant developer of Bitcoin, then go get a fucking job. I'm so tired of being emotionally manipulated by these fucking people. Like, it's not my problem. When I have issues, I figure out how to get a job and work and provide whatever I need to do. I don't understand that. I don't understand why every single time that is the number one argument. I don't get it. I'm not going to sit here and act like that's a good argument. It's a bad argument, okay? And like, once again, I said there's a huge difference between a donation, which is like, fine, okay. If there are people that want to support the developers and they have that option to opt in or opt out of it, perfectly fine. But to sit there and force it on a population, or force it to participate on the blockchain, force people to do a donation, and then when people are like, hey, I don't like that you're forcing it, emotionally manipulate them, like, no, we're not playing these games anymore. I'm done with it. I don't have anyone to impress. I don't have anyone that I'm worried about, their opinion on me anymore. I'm just going to state it like I see it. And that's how I see it. So don't do it anymore. I'm done. It's just not okay to be playing those kind of games with people. It's just not. Now, let's talk about, I'm going to skip this article because they go into further, they basically summarized. I read this entire article here. So we have clarity. I think we're good to go. I don't think we need to read a summary by CoinDesk. I appreciate that it got added in here for clarification. Links are down in the description if you want to hit the sources yourself. Here's a really interesting article. So if you're not aware, we talked about Husat wrote a Medium article essentially on the idea that you could not spam the Bitcoin blockchain and potentially solve a or provide a solution to a mining pool or to the blockchain to solve a block without actually doing the proof of work. And this is something that was obviously brought up to question the integrity of the Bitcoin blockchain. Obviously, my opinion on that was there's too much hash rate. It would cost too much money for a poorer result than actually doing the work, right? At this time. But when we get into quantum blockchain mining and AI, here's where we actually have a big threat that is in the similar vein as not spamming, but an actual potential, right? And this is the article in the Financial Times surrounding this particular subject. And it says, it's easier to explain retail trading of penny shares as a hobby than an investment. There's a gambling aspect, sure enough. Sometimes a stock will double or half or wipe out when the CEO runs off to Greece. Those kinds of events are occasional, however, whereas the hobbyist aspects are constant. Most of the enjoyment derived from penny stock ownership seems to come from the poring over the literature, fighting on message boards, and badgering interested parties. FT Alphaville last year wrote a long post about quantum blockchain technologies, and AIM quoted former .com incubator, hotelier, I've never heard that term, and a restaurateur. I always love it when, and it's coming from Financial Times, like, there's this need to go, I guess, obviously, they're breaking out the thesaurus and picking out terms that I'm like, I know what it means from reading it, but do we have to really be like restaurateur? What are we doing? Who are we trying to impress over here? I don't know. But it has discovered methods to optimize Bitcoin mining. The post attracted more reader feedback than any other by the author in recent times. That's in spite of QBT having a market cap on publication of just over 10 million. Today, QBT's market cap is just over 20 million, or 20 million, I guess, euro, right? Or is that pound? I'm bad with foreign currencies. That's the pound. Yeah, all right. I got it right eventually. Having jumped nearly 200% following its announcement on Friday, a breakthrough achievement for its predictive Bitcoin artificial intelligence model mining tool. This tool, known as Method C AI Oracle, is now performing live Bitcoin mining of Bitcoin blockchain blocks, i.e. around block count 879,000, after Method C has been retained to deal with the current blockchain blocks. The company's board of directors believe this is a significant milestone since the proprietary technology has been used in trials to mine Bitcoin with a competitive advantage against the same hardware without the AI Oracle implementation. The material competitive advantage in mining enabled by the AI Oracle may be achieved by either one, reducing the energy cost of mining by approximately 30%, or two, accelerating the mining speed at current energy consumption and cost with approximately a 30% greater hash rate. We asked on Friday morning for a demonstration. QBT said we could go to Italy, or after a nudge, offered for its tech team to send us a demonstration video. We chose option 2. The video still hasn't arrived. If it does in the near future, we'll update the post. To recap, Bitcoin uses a calculation lottery to determine which miner creates the next block for the blockchain and takes the reward. QBT says it can use AI to estimate the likelihood of producing the winning block before the calculation is complete. It's a controversial claim. Discovering patterns in Bitcoin mining could be important, as it might reveal a bug in a crypto protocol that's used in a lot of security infrastructure. Less important would be if the patterns were a side effect of some quirk in the network rather than the protocol. But its investors would still have a money printing machine they'd be wise to keep secret. For the moment, QBT's money printing machine is AIM. QBT had previously said in a lab test it was able to ditch blocks with no chance of winning almost 50 cents per of the time. So 50% of the time. There we go. I said that wrong. I wish they would have just used a percent symbol. That made me go crazy. I broke. The algorithm broke, boys. I can't do it. Friday's announcement talks of a 30% performance improvement in live testing, though there's plenty of qualification. So QBT's release mentions that live testing started at around the 879,000 block, suggesting the live chain experiment ran for less than a week. The chain was approximately at block 880,000 by the time of publication, so on 10-minute cycles, that's about 1,000 blocks, with each block minting 3.125 new Bitcoins. ASIC chips are quick and efficient, but expensive to manufacture, as they only have one purpose, whereas FPGA chips swap efficiency for flexibility. Bitcoin network difficulty is at a record high, so FPGAs tend to only be used for hopping on whichever shitcoin is in vogue. Even using the newest Bitcoin ASICs, a lone operator still has a 1 in a quadrillion chance of mining the next block. For that reason, professional miners smooth out returns by pooling resources, meaning everyone takes a share of rewards proportional to the processing power they contribute to the pool. QBT's live test uses one of these pools, which makes it more difficult to grasp what exactly is being tested. One way to think about it would be as a jackpot-only lottery syndicate, where one syndicate member believes they can sense unsuccessful tickets post-purchase. The lottery operator refunds spoiled tickets before the draw at 30p in the pound. So premonition is a useful talent. The syndicate member can claim partial refunds for low confidence tickets, confirming after the draw that they would have lost. Taking pre-draw refunds would lower their cost of losing. Of course, there's an incalculably small chance of any ticket turning out to be a winner. Maybe the syndicate member only thinks they have supernatural predictive abilities, in which case they're mucking tickets randomly. If these spoiled and partially refunded tickets were excluded from the total in the syndicate, it'd mean a smaller cut of winnings. The 30% profit from the refund would, in effect, be a 70% loss. Though given the low odds of anyone hitting the jackpot, such an inefficiency might take a long time to average out. And if the syndicate didn't know tickets were being spoiled, the member might be claiming a share of winnings based on tickets they didn't have. Either way, not good. To be clear, we have no evidence to suggest that QBT's testing is flawed. We have seen no evidence either way. When asked for details and examples of the methodology, QBT CEO, Executive Chair and Consultant Francesco Garden, we'll just say, responded by email. He said, tests of the AI Oracle implementation on FPGA are just the tip of the iceberg. The specific AI Oracle has been trained for several weeks to deal with the current blocks of the blockchain. While the current version of the Method C model has been developed for over a year, the FPGA implementation of the specific AI Oracle, which deals in real time with current blocks of the Bitcoin blockchain, is just a live evidence of a software version, which, if not on hardware, cannot run fast enough to cope with the 10-minute time limit to produce winning hashes above a minimal target accepted by the pool. We are mining Satoshi, definitely not Bitcoins, with one FPGA. What really matters is the improved performance of an FPGA. With the AI Oracle, with the same double SHA-256 lanes, compared with the same FPGA without the Oracle. So basically what we're seeing here, guys, to sum it up here, because I realize it's getting a little long-winded, is, well, we're going to be going back to FPGAs mining Bitcoin potentially. Well, obviously a little bit joking there, but they're utilizing, or the claim is they're utilizing AI to essentially figure out what the winning block or the winning solution will be, or the highest potential for winning solutions. So it reduces the amount of work and it only works on the ones that have the highest potential of finding the solution. Right now, their claim is that it will essentially offer a 30% increase in efficiency, Now, even such, right? If you were to say it's 30%, reduces that by 30%, you would still probably not keep up with ASICs, best I could tell. And we would have to wait and see, what they say as far as if this is even possible down the line. But this is kind of where we're at. Now, obviously, it brings in the quantum part of this as well. So, and then if that can be integrated into it, I assume then you would see that dive even more. So it says at the end here, though, quote, "We believe that this has potential to be a major breakthrough for the entire Bitcoin mining industry, as QBT has developed an AI oracle which can either reduce the energy cost of mining or increase the speed of mining at current energy costs by approximately 30%, which it can prove through live demonstrations. And right now we don't have any live demonstrations." Now, obviously, 7ho in chat says seems like BS. And yeah, it could be BS, but we are moving into the world of AI. And there is, if it breaks this, here's the problem. And I think the article brings this up in the beginning. The issue here is if it breaks this and it can do this, then it invalidates SHA-256, right? And if that happens, then we have bigger problems than just Bitcoin, I think, at the end of the day. This threat has also been thrown around for a long time. Like, once quantum computing's out, Bitcoin will be insecure. And this has been something people have been saying since the inception of Bitcoin. It's yet to be realized. Now, they are adding AI into this, and we'll have to keep, an eye on it. I thought it was interesting, though. So, it's not trying to fully invalidate, but I think, okay, let me know what you guys think about this, because I'm thinking about what the argument would be. It's fun to think about in general, right? They're saying essentially there's a bunch of trash. There's known work that will not produce the winning block, therefore don't do it. And the AI Oracle looks at all of the options, throws out a bunch of them, and then only works on the ones that have the highest potential at producing a block. That's what it's doing. Does that invalidate Bitcoin? Or if that was true, does that invalidate Bitcoin? If it can be predictive like that, or even worse, does that invalidate SHA-256 in general? I don't know. Just thoughts. I think not. I think you guys are probably correct in chat. It's just fluff. But they are already, I guess they're already a successful company. Here is their blockchain technologies. There was this public on, I assume, in the EU. They're down 30% right now. But there you go. There's their stock. I need to get some chapstick and drink some water real quick. So give me a second. I'll be right back. Oh, it's raining. Sorry about that. I'm all dried out. Okay. All right. I'm going to give my thoughts on cloud mining in general. Let's see if there's a... So if you guys aren't familiar, I do have an editor for the channel. And the good news is he kind of can have these questions that I think in general, I just automatically blow off and don't even consider. And he sees things, I think, like the general public sees them, which is an article like this will come up. And it's titled Effortless Bitcoin Cloud Mining, Litecoin Mining, and Bitcoin Cash Mining with Profitable Rewards at STG Energy. And then it will go through and it will look really fancy. It'll give you some stuff like, okay, here's your contract price and your total return and your payout frequency. And you'll say, oh, wow, look at this. If I invest $108,000, I'll get $292,000 in return. In general, if you see anything like this ever, which is guaranteed returns of any amount, in an app that you're investing in, it's a fucking bullshit. It just is. Now, I realize that it makes it even harder to navigate because you have content creators that are promoting these things all over YouTube. You even have some that have been previously trusted content creators in the crypto mining space that are promoting these apps. Now, in general, I think what happens a lot of times is that these content creators fall for it just like everyone else. And then they see that, oh, well, I can also get some additional affiliate revenue if I advertise this and give them my link. And then they'll do it. It'll look like they're making money. And then eventually everything collapses because you're building it on a house of cards. It turns into multi-level marketing and it turns into a scam. Everybody loses their money and somebody ends up in jail. I want you to remember this thing that happened a long time ago called BitConnect. And BitConnect was a project in the 2018 time. And it was a very similar thing. It was invest in this project and then you will get a certain amount of rewards. It worked for a long time. And there was a very famous content creator called Trayvon James. And, you know, yes, some of the guys from the scam running the scam ended up in prison, but so did the content creator. And I feel like I shouldn't have to say this, but like if you're participating in any of these cloud mining things, you are playing with the devil there, right? You're playing with the devil there and you need to stop. I'm going to say it again because I see it happening with people that I don't necessarily think are trying to do anything malicious, but they're going to get themselves in trouble. And that is the telltale sign every single time is if you pull one of these up, you'll see this. And I bet you 100% if we scroll down, we're going to find out that this was some sort of, here we go. The information provided in this is in this press release. So this is a press release, is not a solicitation for investment, nor is it intended as investment advice, financial advice, or trading advice. Cryptocurrency mining, which this is not, and staking involve risk. There's potential for loss of funds. It is strongly recommended you practice due diligence, including consultation with a professional financial advisor, which if you actually do, will probably tell you not to participate in anything like this, and before investing in trading crypto. So STG Energy, just to give you guys an idea, these are not articles written by people that are interested in the project and actually even find success with it. What it is it's a press release that STG Energy, the company that's running this cloud mining, is sending out to other people to and paying them to put on their website. So that's what's happening. Now, this particular website's called Global Newswire. But in general, that's what is happening, right? These are press releases like a Medium blog post or something like that. And yes, I did see Brandon Coin was pushing a Bitcoin phone app. And the thing is like, to Brandon, like, buddy, I really honestly don't think that you are doing anything intentionally wrong. I think you are just falling for a scam. And unfortunately, I've seen this before. I don't want to see somebody like Brandon Coin or something end up in like prison from a similar situation to like Trayvon James or something. So that is, and I'm very passionate about that. I really do mean that. You need to be very, very careful with these things. Anytime it shows any kind of, total return numbers for a specific amount invested, and then you start to see any sort of referrals added onto those things, you're in very, very sketchy water, because you are talking about a security at that point too, because it fails the Howey test, right? And you don't own the hardware. You can't verify anyone owns the hardware. You can't verify it's being run or anything like that. Now, there is the cloud mining that's separate, like NiceHash. But how can you tell the difference between a valid cloud mining platform and an invalid cloud mining platform? Well, NiceHash ain't that profitable, and it's very difficult to make it profitable, right? That's why. That's the main difference. Is one looks like it's profitable, but it's going to be a house of cards, and one doesn't, right? And so that is, when you're looking at these things, just think logically. If it's too good to be true, it's probably too good to be true, right? And you got to be really careful, especially as a content creator, because that kind of thing can get you in a lot of trouble. And then they like to make, like, if you look every single time, who are the fall guys? It's always like the content creator or the public face of the public face of whatever it was, right? So what do I think about cloud mining? This is what I think about cloud mining in general. I think a majority of them are scams. The ones that aren't are extremely difficult to be successful at, like NiceHash, right? It's effectively like trading cryptocurrencies, right? You got to sit there for 27 hours a day, 10 days a week, staring at a screen and hoping you can pick up the one thing on pump.fun that pumps through the roof, right? And a majority of the time that never happens, right? And so that's where I really sit. I thought it was worth talking about, one, because I have seen other content creators pushing it. Two, because even like my editors like, hey, talk about this. And I'm like, oh crap. Like, it's getting enough attention, like these STG energies and stuff like this. They're getting enough attention that people that don't necessarily participate within cryptocurrency may see this and think, oh, I'm mining Bitcoin, when you're probably not actually mining Bitcoin, right? At the end of the day. C-Dub says, can Flux pass the Howey test? I don't want to approach that with a 10-foot pole right now. Do I think it could? Are we talking about the token? I don't know. That's a good question. There's all that separation, right? So you have you have like the Zelcore wallet, which is clearly a company, right? And then you do have the blockchain that's tied to it. Then you have all the parallel assets and everything tied to it as well. I'd have to look into it. I don't know the answer to that off the top of my head. I assume you have a feeling and maybe you can explain it a little bit deeper. I thought, my understanding is Zelcore, the wallet, and then like Flux Labs and all of that are all separate from like the blockchain itself, right? That was my understanding in general. So there is a new American hardware manufacturer for Bitcoin mining. So the recent trade tensions could present an opportunity for American hardware manufacturers to help ramp up onshore Bitcoin mining, according to a US Bitcoin mining supplier. President Donald Trump's trade war with China and efforts to ramp up onshore Bitcoin mining will be a boon for US mining rig manufacturers, which currently only hold a small sliver of the market share compared to other major Chinese counterparts. The United States accounts for over 40% of the Bitcoin network's global hash rate, but still leans heavily on China-made mining rigs. China-based Bitmain reportedly holds as much as 90% market share in the Bitcoin mining manufacturing market. Trump's continued focus to support the U.S. Bitcoin mining industry highlights the urgent need to address U.S. reliance on foreign technology. Ardine's chief strategy officer, Sanjay Gupta, told Cointelegraph in a recent interview. This guy, do you know who this guy is, guys, by the way? Let's see if it'll show all the stuff. Yeah, let's see. Where's his work? Is this the right one? Because, hold on. Yeah, it is. That's what I thought. So this is really interesting. So Sanjay Gupta was a medical correspondent for CNN. What's he doing in crypto mining? I gotta go find some tinfoil, boys. I'm freaking me out over here. So it says one of the firms affected believed it was due to a mistaken belief that chips were illegally imported Chinese radio frequency devices. It took months before they started being released. Gupta said that U.S.-China trade tensions have also disrupted the flow of foreign Bitcoin miners. These trade tensions have increased supply chain disruptions, with many hardware shipments facing delays and uncertainties. The U.S. was already competing with China to win high-end chip manufacturing market, but the recent trade tensions have only intensified these challenges for U.S.-based crypto miners, he added. China-based Bitmain is said to hold the majority of the Bitcoin mining manufacturing market. It expanded its production line into the U.S. last December to improve supply chain efficiency. Gupta said his firm could also stand well positioned amid Trump's plan to ramp up onshore manufacturing, as a dramatic increase in demand for electricity would in turn put a tremendous deal of pressure on the electric grid, making it more important for Bitcoin miners to operate off-grid. Ardine recently announced the launch of its new Teraflux AH3880 hydro-cooled Bitcoin miner, competing with the likes of Bitmain, MicroBT, and Canaan. So US side, rack mount, it looks like. Rack mount water-cooled has been something Watts Miner's already been doing, so that's already something there. So asked whether a further uptick in Bitcoin mining activity in the U.S. could hurt Bitcoin decentralization, Gupta said that securing the Bitcoin network with more energy efficient solutions in the U.S. would be a net positive for Bitcoin, but said there could be risks of the increase outpaces technology and sustainability and decentralization. Over 95% of the network's hash power already comes from the U.S. and China alone. So let's take a look at this. Is this the same Sanjay Gupta? I'm curious. Where is his work? Here, Sanjay Gupta, Aradine? Aradine? Is that how you spell it? It's the same one. Interesting. So the same guy that went on Joe Rogan, told a bunch of lies about Joe Rogan surrounding the vaccine and COVID, and worked for CNN, is now working on manufacturing cryptocurrency miners in the United States. Is that right? Is that the same guy? No, it's a different guy. Okay. I was freaking out there for a second. Okay, different guy. Different guy. I was like, what the hell is happening here? Okay. This is what that guy looks like, and this is what the Ardine guy looks like. Different guy. Okay. All right, we're good. We're good. Everything's fine. Everything's fine. It's fine. I don't have any experience with solar, no. Other than like at the day job, but that's it. It'd be funny to just start being like, bro, Sanjay Gupta is making Bitcoin miners though. Well, he is, just a different one. What's the likelihood of that name? What's the likelihood of that name being the same? Like, I feel like that's, I mean, I guess it's probably a popular Indian name, huh? So here's the website. Can you buy the Teraflux now? They're doing all the same stuff like AI, blah, blah, blah. Okay. So here's what they're saying. Obviously, we need to build Bitcoin miners in the US. So this lopsided distribution shows that even though China may have a stronghold on the manufacturing front, other countries and regions are contributing significantly to the overall growth, development, and profitability of Bitcoin mining. The decentralized nature of Bitcoin allows participants from around the world to engage in mining activities, resulting in a diverse and widespread ecosystem beyond the borders of any single country. It only makes sense that the design and manufacturing of Bitcoin mining ASICs should follow suit. Unfortunately, the U.S. semiconductor industry's share in global semiconductor production capacity has seen a sharp decline over the last 30 years, falling from 37% to just 12%. The decline has been driven by increased competition from other countries and lack of investment in domestic manufacturing capabilities. Recent events have demonstrated how vulnerable U.S. businesses are to supply from overseas ASIC manufacturers. Blah, blah, blah. In response, Biden-Harris administration has launched efforts to bring semiconductor manufacturing back to America. Now, so I guess they haven't updated this yet, because this is saying chips in America by the Biden and Harris administration. And then now, obviously, they're just saying off of Trump's administration. It's kind of funny how regardless of who's in power, they always like to use those people for their press releases, but the plan was here before Trump anyways. I mean, I guess you could say the trade war is driving a bigger need for it faster, but it was in anyways. Yeah, somebody said I went to Dearborn schools in Michigan. I had 15 Sanjay Guptas in my class. It almost tricked me, man. I was like, wait, what the hell's going on here? I'm being dumb. Give me a break. I get a lot of brain fog these days. I'll work on it. At least I'll correct myself. All right, that's what we'll do. So Bitcoin mining hash price stays flat despite higher difficulty. Didn't we cover this one already? No, this is new. Okay. So the mining industry continues to struggle and faces multiple headwinds, including high computing costs, trade war fears, and energy issues. The Bitcoin mining hash price, a miner's daily revenue per unit of hash power expended to mine blocks, has remained constant at around $48 per petahash per second, despite a slight 1.4% uptick in Bitcoin's difficulty. Data from CoinWars shows that Bitcoin difficulty climbed to 113.76 trillion at block 889,081 on March 23rd, up from the 112 trillion difficulty in the previous epoch. According to the Miner Mag, a hash price below $50 places financial stress on miners running older hardware, like me, such as the Antminer S19 XP and S19 Pro. Dear Lord, it's been stressful, by the way, as some of you probably know. The older hardware, coupled with declining network transaction fees, risks pushing some miners into unprofitable territory, forcing them to turn off their hardware until they upgrade their application-specific integrated circuits or network conditions change. Mining firms have been struggling since April 2024 Bitcoin halving, which slashed the block subsidy to 3.125 Bitcoin per block mine, generally increasing network difficulty, and the recent downturn in crypto markets due to macroeconomic uncertainty. Research from financial services firm JP Morgan shows that publicly listed Bitcoin mining companies collectively lost 22% of their share value in February of 2025. Even miners who diversified operations into artificial intelligence and high-performance computing data centers to shore up revenue lost through mining activities are facing financial pressures, the JP Morgan report found. The financial services firm pointed to the release of DeepSeek R1, an open-source AI model trained at a fraction of the cost of leading models, yet performing on par with closed-source alternatives as source of strain on large AI data centers. It's more than just that, though, because in reality, a majority of the AI is already in the big three, right? It's the Twitters, it's the Google, it's the Microsoft, and it's the Amazon. And by and large, all of those companies have their own infrastructure. They're not renting AI infrastructure from other individuals. And the scope at which Bitcoin mining utilizes power, and to maintain those power purchase agreements, needing to run that AI hardware all the time and maintain all those jobs, there's way too much needed to stay online for them to make up that with basically AI. It's not going to happen. You're not going to have that high of a demand, especially when all of the AI craze and the work being done for AI is being done by people who can afford their own damn GPU data centers. So that's not a surprise at all. It's not because of DeepSeek R1. It's because of all of them. Grok, Twitter has their own data center. ChatGPT has their own data center. Google has their own data center. Amazon has their own data centers. You're not going to, you have to get smaller clients, and those smaller clients aren't going to be at the power level needed to keep the cost of the power low. That's just how it is. I don't even know why I've been talking about this forever. It's very frustrating, but this whole AI narrative for miners to move into AI is just it's not real. It's not real. It's a thing that you put to get investors. And I'm sorry, but board members and investors are idiots, and they're ruining the country. because they do things purely for profit without understanding what's actually happening. You have a bunch of idiots that don't know what they're talking about, making decisions about things they have no idea how they actually work, and they can't actually look at what the market wants in reality. The same thing's happening in video games right now. We see this across the board. They're like, let's come out with an open world that you can do anything you want in, and then we're just going to throw in a bunch of uninspired content to make it look like there's a bunch of shit to do that nobody wants to do. Nobody wants to do all the stupid shit in Assassin's Creed anymore. But because it looks like, oh, the board members are like, oh, if we do this, then people will buy this. And because they want to get to the end game, and because they're so fucking bored from playing the regular shit that has nothing to do with, that has no fun in it, they'll pay us and then they'll do it. And that's what they think is going to be good. And it's not. But the same thing's happening with AI and crypto right now. It's like slap AI on everything and that's going to make the investors happy, when in reality, it's just not what the market wants at all. It just isn't what the market wants. And it's so frustrating that when we read the narratives, they're like, it's because of DeepSeek R1. No, DeepSeek R1 still used GPUs. It did. It just used AMD GPUs. No, this is dumb. All right, rant over. A steadily rising network hash rate, which is the sum total computing power in the Bitcoin network, is also creating increased competition among miners who must expend greater computing resources to remain profitable. Fears of a prolonged trade war between the United States and Canada, alongside constant tariff headlines, have put miners on edge. Threat from Canadian officials is to levy tariffs on energy exports to the United States to place even more pressure on the already struggling industry. So there you go. I mean, like, the best news for everyone participating in Bitcoin mining would be if a couple of the public companies went under and the competition sparked back up. Do I think that will happen? No. It's getting to the point to where I think it's too big to fail and the ties to the power grid are too high. At the end of the day, like, I would assume, like, some of these big public mining companies are working directly with energy companies and they need that power to be being utilized. I'm sure the power companies will give them cuts and breaks on cost of power, etc., right? Is Grok running on quantum computing? Grok was running on NVIDIA GPUs because that sale was public of all of those GPUs. Grok, you can go Grok AI, NVIDIA. I believe they should. Yeah, using 100,000. So Elon Musk XAI using 100,000 NVIDIA H100 GPUs to train the Grok 3 AI model. This was last year in July. There was a recent purchase. I don't remember when it was, but there was a recent one I saw. I don't know if it's actually here. Maybe it was this one. So this one was, wait, this was updated 2 weeks ago. But Grok AI and NVIDIA, it says currently it's using NVIDIA H100 GPUs, but this was for the Grok 2 model. It used 20,000. For Grok 3 model, 100,000. But aren't we on Grok 4 now? There was a recent announcement of more GPU sales to Musk, but I don't know where it is. But that did happen. So there you go. Anyways, that should answer that for you guys, hopefully. I mean, we already talked about essentially the struggles of the Bitcoin hash price. That is obviously, it was already mentioned in the previous article that is affecting Bitcoin mining stocks. And this is resulting in Microsoft reportedly cutting plans to invest in data centers in the US and Europe, driving cryptocurrency miner stock to tumble. So this is interesting. Bitcoin mining stocks are down after tech giant Microsoft reportedly scrapped plans to invest in new artificial intelligence data centers in the US and Europe, citing a potential oversupply, according to a report by Bloomberg and data from Google Finance. Look, I was right. How right am I all the time? I swear to God. Just before this, what did I say? I said they don't get that there's way too much demand. And that's what Microsoft is seeing. That's what they're saying right here. Essentially, there's an oversupply of GPUs available for AI. We don't need to build more. And what that means for all of the crypto miners that were looking at diversifying into AI is that it's not going to match with their power purchase agreements, and it's not going to be sufficient enough. It's just not. And that's why you're seeing the specific ones. This is obviously going to affect the ones that are trying to move into AI, which, I talked about this before, like Foundry had mentioned at Consensus that it wasn't a good idea. It looks like they're right. Now, I don't think Marathon Digital was moving into AI. I know Riot was, Bitfarms, right, Hut 8, yes. And they dropped between 4 and 12%. Is it a direct cause? Maybe not. The stock price retrenchment highlights the cryptocurrency miners' increased independence on business from artificial intelligence models, or dependence on those, after the Bitcoin network's April 2024 halving cut into mining revenues. According to benchmark stocks analyst Mark Palmer, investors already anticipated Microsoft data center cuts. In his view, the share price pullback appears to be driven more by stagnation in the price of Bitcoin than any other factor. I would agree. Especially if you're trying to throw in like ones that I have heard specifically say they weren't moving into AI. Right. But the original premise of like Microsoft is not building more AI because there's an oversupply, we already kind of knew that, right? Miners are diversifying into AI data centers. I just don't believe this. I don't believe, there's like one or two. There's like Hut 8, Hive. That's it, right? Really not that many moving into AI. I guess it says that Core Scientific pledged 200 megawatts of hardware capacity to support CoreWeave's artificial intelligence workloads. So Core Scientific also, but isn't Core Scientific already struggling again? Like everyone that's invested into AI is struggling, huh? Yeah, Bit Digital down 34%. Maybe not as much. Core Scientific, they say, is up, but there's a lot of weird shit going on with Core Scientifics and the way they restructured. Yeah, look at this. Hive Digital is the other one I mentioned, down 38%. And then Hut 8 down 14%. On March 26th, analysts at TD Cowen said Microsoft had abandoned plans to build several new data centers that would have generated some 2 gigawatts of power, according to Bloomberg. The analysts reportedly attributed Microsoft's pullback to a perceived oversupply of computing capacity for AI models, as well as the tech giant's decision to forego some planned collaborations with ChatGPT maker OpenAI. In the past 6 months, Microsoft has canceled various data center leases and delayed plans to onboard more capacity, according to Bloomberg. Microsoft's data center investments are expected to slow further in the second half of 2025 as the company finishes $80 billion in planned buildouts and pivots to outfitting existing centers with hardware and equipment, Bloomberg said. CleanSpark is pure BTC, wants nothing to do with AI. So if we look at, let's look at that. CleanSpark, up 1.2% year to date. I know Marathon Digital, or not Marathon Digital, Foundry, but I don't see Foundry listed here. What is Foundry a part of? Marathon Digital is down though, and they had no plan, so they're down 35%. But Marathon Digital is probably down because of Caspa. I'm just kidding. I'm kidding. Don't get mad. But I mean, so we have the rumors of the 5060 Ti coming out here soon. The interesting part, of course, for us is going to be the 448 gigabytes a second of memory bandwidth. This will be similar to the 5060. It is going to be double the bandwidth of the 4060 Ti, almost double the bandwidth. So we should see a lot better performance out of the 5060 Ti. If we compare that to, or the 5060 in general, right? So let's look this up real quick. RTX, what was it? 4070 specs. Am I right or am I wrong? It's hard to remember all these things. That was 504. So a little bit less. So if we do hashrate.no and we pull up, let's see, let's pull up the 4070. And we do auto Lycos. 120 megahash a second. Let's go percent calculator. Let's do 448 of, is what percent of 504? That's going to be, oops, 504. There we go. 88%. So we'll say, what is 88% of 120? The 5060 should be getting 106 megahash a second. Let's look at the power for that. Is going to be 180 watts. The 5060 is going to be the winner here. 150 watts. What are the specs on the power? 200 watts. So we will see 75%. And let's see. So if we look at the power consumption on the 4070 was 72 watts. So let's do, I mean, I don't even need to do this. It's going to be 75%. So 75%. I mean, will it? Probably not. 63 watts. So the RTX 5060, if the rumors for the specifications on the memory is correct, we should be seeing 106 megahash a second at 63 watts on Ergo. Which would put us at 10 cents a kilowatt hour, losing money. What is the hosting rate these days? 85? Not 85. Oh, 85. We'll do 09. I don't know. And you're basically not going to make a profit at all. But if we do, let's just run this real quick. 106 at 106 at 63 be 1.68. mega hash a second per watt. Let's go to GPU, or let's go to coins, ergo. Take a look here at the benchmarks. It would put it at 4070 Ti super efficiency. Which would be pretty good. And what was the 5070 specs? Again, I forgot. $672. What was the TDP on this bitch? $250. And what is the overclocks here? Was the 95 watts? It's actually potential that the 5060 will be the most efficient. Did 88% in the calculator be lower than 105? Oh, sorry, you're right. I thought I typed 75 in there. 54. Okay, that changes our numbers then. So 54. Thanks for the catch. 1.9. That makes more sense. Because I was like, it's going to be more efficient than most of these, right? Which would put us at... Oops. Coins. Ergo. Benchmarks. That makes more sense. So it'd be like right under the 5090 in efficiency. That makes sense. Yeah, 5070 are the new king right now tactics. But I haven't gotten to test one yet. So technically the 5080 is still better than this. And the 170HX is even better than this. Oh, I got something to show you guys. You want to see something cool? Oh, hold on. I don't know if I'll have time because my body don't work as good as it used to, but I'll see if I can get someone to help me with this. That's not the fun part. This is the fun part. Oh, give me 1 second, boys. But just before I start getting sick again, but so we'll see how long before I start doing better again. Liquid metal. and water block for the HX, for the CMP 170 HX. So we're going to water cool it, or I'm going to try, or I'll get somebody to come help me do it. I'm excited. But we got all the stuff, and I got quick disconnects for the deal. Yeah. It's really hard to find water blocks. That's the last water block in stock. These cards. Oh, I already got it. Yeah, last water block in stock for these cards that I could find. Unless you go to like eBay or something. But it's brand new, so anyways. Right there. Whatever. Doesn't matter. Exciting stuff. I'd like a 5090, but I don't know if we'll get to there. Let's talk about miner releases. SRB miner version 2.8.1 is released. There's a performance improvement on the RX 9000 series for ProgPal algorithms. I don't have a 9070 yet. That's another card I need to get for testing. And some improvements on the Autolicos V2 as well for the 9070. And for XE hash, FP hash, and Kryptonite. And they fixed invalid shares on Intel B500 series. They removed GPU support algorithm for Verus hash. What time is it? Okay. I'm gonna be honest. Getting up and moving around, I'm done. So I have like a bunch of stuff that I want to react to, but I think about an hour and a half is all I can get out of me today. Or a couple hours, right? No, hour and a half. But I think that's all I'm going to get. I'm going to go relax. But thanks everybody for hanging out today. If I have time later this week, I'm going to stream the reactions over on twitch.tv/blindrun. So make sure you are following over there. But I stood up and now I'm hurting. So I'm going to go. I'll see you guys next Tuesday. Thanks for hanging out.